Good afternoon, everyone. Welcome to Traders Biz Global Solution Forex Trading Live Series here on TikTok. You're welcome. In this series, we'll be taking you through what and how a Fibonacci tool is. So, follow me as I go through what a Fibonacci tool is. Okay? So, what is Fibonacci tool? Fibonacci tool are used, or it's a tool used to mark out key levels in the forex market. Okay? There are tools used to mark out key levels in the financial market. All right. Now, what are now these key levels? That leads us to when to use the Fibonacci tool. Okay. What are the key levels? The key levels are where we spot potential buying opportunity or potential selling opportunity. So the key levels where we spot potential buying opportunities and potential selling opportunities in the forex market. Okay, so for example, if you have an uptrend, all right, which consists of higher high, lower, higher high, and higher lows, higher high, and higher lows. So now we are having an uptrend, so we are expecting to enter a buy. So how do we now enter the buying opportunity? Okay, so that's when the Fibonacci tool is used. Also, we know that in a downtrend, which consists of lower highs and lower lows. Okay, so we expect price to retrace before we join the sell. But in a consolidating market, we are not doing anything. We are not buying or selling in the consolidating market. The market doesn't have a clear direction, so we are not using the Fibonacci tool. Okay, so it is used whenever we have a potential buying and potential selling opportunities to enter the market at key levels. Now, these key levels, according to many traders, we have 0.5 or 50% levels. Okay, we have 0.618 or 61.8% levels. Okay, we also have 0.786 or 78.6% levels, etc. We have more than that, but these are the key levels traders are willing to buy or sell in the financial market. All right, so how do we draw the Fibonacci tool whenever we have a potential buying or potential selling opportunity? How do we draw the Fibonacci tool? Okay, for example, in an uptrending market, we draw it from the last higher low to the last higher high, which consists of a range. Okay, a range means difference. Okay, the difference between the upper and lower boundary. Okay, that is what a range is. So in an uptrending market, the last higher high is the upper boundary, while the last higher low is the lower boundary. That's the range. So you draw your Fibonacci tool from the last higher low to the last higher high. Okay, so you draw it from left to right. Okay, so somewhere here will be the 50% levels. Remember, 50% or 0.5. Somewhere here will be the 61.8% levels or 0.618, like that. So, and so on. Okay, we have 1 here, we have 0 here. In a downtrending market, you draw it from the last lower high to the last lower low. That's the range. Okay, so you draw it from the left to the right. Okay, so somewhere here in the middle is the 50%, followed by the 61.8%, and so on. So you are going to be shown on the chart how these things are. So that's how to draw the Fibonacci tool. Let's now go to the chart now to see what the thing is. Okay? Now, without the chart, this is what the Fibonacci tool is. You go to your toolbar here. You can see your toolbar here. These lines, which consist of horizontal lines, that's what Fibonacci tool is. You can see Fibonacci retracement. You have the retracement and the extension levels. So the Fibonacci tool, as you can see, you pick it like this, then come to your chart and draw from left to right. Okay? So that's what Fibonacci tool is. You can see horizontal lines which are showing levels. Okay? It is used to mark out key levels, as we have said earlier. Now, if you want to, since we are not using all these levels, we are traders, we have said 50%, 61.8%, 78% are our key levels we are looking at. So that means we can edit and eliminate all other key levels like the 23.6 or 0.236, 0.38, 1.618. That's the extension levels. We can eliminate those levels. How do we eliminate those levels? So click on a Fibonacci like this. You see this pop up here. Okay, you click on the settings. This hexagonal shape with a circle inside. You click on the settings. Okay, so now going through the settings now, you can now unmark those levels we are not using. Like the 0.382, you unmark it, you won't see it there, you can see. 0.236, you unmark it. 1.618 unmark, 3.618 unmark, 4.236 unmark, 2.618 unmark. All right, so click OK. So you can see these are the main levels we need. You can as well edit it further. Maybe you want these numbers to be written here. Okay, you click on the settings again. So you scroll down or scroll up. Anyone? So come, you see. So if you want it at the right, so it has been moved to the right. Okay. So we want to move it so that it won't be at the top like this. It will be at the center of the line. Okay. So for easier reference, okay, you go to down. So label middle. Okay. So leave the font size as 12. Then now, so we have it 0.78%. We have 61.8%, 0.5%. That's how Fibonacci tool is. Now, let us go to the chart now. Those of you that are just joining, you are welcome to this Global Solution Forex Trading Live series. In this series, we are talking about Fibonacci tool. So you're welcome. So now let us go to the chart to see how potent this tool is. Remember, Fibonacci tool is not used in isolation whenever you are trading. It is used in combination with other confluence like institutional levels, institutional candle, imbalance, other blocks, etc. Okay, so we are not using it in isolation. Now let us go through the chart and see how it is being used. So this is a Bitcoin US dollar chart, the 1 hour time frame. So as we can see here, you can see that there's a break of structure here to the downside. Okay, break of structure is when the market move from an uptrend to a downtrending market. All right, so we can see that this is a low high. That means we are having an uptrend and we have broken structure to a downtrend. So we have this high here, we have a new low, which is lower than this. We call it lower low. So we have lower high, which is lower than this. We call it lower high. This is another lower low, lower high. So now, how do we now draw this Fibonacci tool? We want to draw this tool now from here, from this high here to this lower low. Okay? Remember, that's our range. From this lower low, if we go back to what we explained on the board earlier, we have the, in a downtrending market, we have the lower high, lower low. So you draw from the lower high, the higher high there to the lower low. Okay, so we are drawing from the high there to the lower low. So you pick your Fibonacci tool. Okay, so you draw from here to here. So that is from here to here, you can see. So we have the 50% levels and above. So in a downtrending market, if we draw the Fibonacci tool like this, the 50% levels and above is called the premium zone. So that is where we are going to spot our potential selling opportunity. So as you can see on this chart, when price got to that level between 50% and 1 year, you can see that the price ejected from there and sold lower. Okay? If you draw it again, from this place now, which is the new lower high, to the new lower low here, you can see price rejected from in between that 50 to that, in that region, which is the premium zone. Price rejected from there, you can sell from there also. You can see how the market comes down. Okay, so that's how it's being used. If you enter, if we draw it again like this, from the last lower high to the last lower low, you can see how price rejected from that point to sell lower. Okay, now we have seen how it's being used in a downtrend, and we have seen how it works. Remember, it doesn't work in isolation. It works with market structure and other confluences. Okay, so as we can see here, the market broke structure here. Okay, there's a break of market structure here. The market go higher, went higher than the last lower high. So we have a new higher high here. Okay, so having a new higher high, that means this is our last low. Now, to spot a buying opportunity now, because we are in an uptrend already, we draw our Fib levels, our Fibonacci tool, from the last low to the last higher high. Okay, this is the last low to the last higher high. So from the last low here, you can draw from the body to body of the candle, or from wick to wick of the candle, depending on your preference. Okay, so I prefer body to body. All right, so we have drawn it from this low to this new high, which is higher than this. That means you are in an uptrend. If you see the market is the 50% level and below. Now, in an uptrend, the 50% and below is the discount zone. That means the price is small. We are buying small. So we are buying at a lower price. Okay? So we are buying at the discount zone. So that zone is the 50%, levels 50% to this 100%, which is 1. Okay? So if you can see that when price got to this 50%, it's rejected. Okay? That means that place is effective. Okay? Now, you never can tell. You can see price, retrace back to this point before buying upward. Why? Because we have an imbalance here. So you cannot know everything in one series actually. For those that don't know what imbalance are, I know some people are here who don't know what imbalance are. Imbalance is a kind of inefficiency in the market. When we have much buyer than the seller or much seller than the buyer. In this case, there's a gap here. This gap, you can see that week, this week didn't fill this week. So that means there's an imbalance here. If you want to know more about it, just keep following us on YouTube, on TikTok. So by that, you know more about Forex insights. Okay, so you can see price retrace to somewhere here before even buying further because that is a discount zone. Okay, that is what a Fibonacci tool is. Always remember, while using the Fibonacci tool, you are not using it in isolation. You are using it in combination with other confluences in the market. Okay, so thank you for joining us in this series. We'd like you to follow us on our social media pages, on our TikTok, YouTube, and others, especially on TikTok. Follow us on TikTok to see more of this series so you can learn more in the financial market. Okay? If you have any question also, you can send us a DM on our page. Thank you for joining us in this series. See you in the next series.